What's going on, guys? Today we're gonna talk about something that's kind of been on my mind for a while now, and kind of how I've been navigating the market. The past several years. I'm still in my mid 20s, getting closer to the 30s, but some things that I've kind of acknowledged that I kind of struggled with earlier on, and something I think our generation as a whole kind of is up against the challenge of the society we live in today. And as you can see with the title on this video here, it says how to get rich slow and pretty much how to implement investors mindset. In today's age, right, I just feel like, with social media, with everything being so based on instant gratification, that we're kind of set up for the the wrong mindset to have, especially when coming to the stock market. A lot of these brokerages nowadays are trying to gamify everything from I guess like my point of view. Granted, they're implementing some good things. Don't mean to throw Robin under the bus, but I feel like they've really gamified the process. And I wish it wasn't that way because I think it's gonna hurt. It's gonna hurt a lot of people. Bringing emotions into investing is a recipe for disaster, in my opinion. It's can be viewed as gambling. Anytime you're emotionally attached to an investment that can go up and down without something that you can control, it can be tough to navigate, and it's something I've kind of struggled with earlier on. So, with that being said, um, it's okay to get rich slow, right? And especially nowadays, everybody wants to get rich quick. What's the next get rich quick scheme? And the problem with that is the amount of risk. I mean, just from a stock market, point of view, the amount of risk you have to take in order to get rich quick is insane, right? You know what I mean? Like it's any first of all, options, buying and selling options, calls, puts, in it of itself is a very risky asset class. You're using a tremendous amount of leverage to trade, and you know, um, with reward comes risk, right? Like you can't get all of this upside without risking, a lot of money. Now, if you're managing risk properly, you can take certain risk to reward ratios, which definitely favor you. If you can find your edge in the market, then yeah, by all means, it can be good to take risk and proper risk. But you know, you have to understand that you're going to lose more than likely more than you're going to win, and you have to implement a trading strategy that makes sense of that, right? Like you can't if you have a 50% win rate and you're winning less than you're losing, then it's inevitable, right? It's a losing strategy, and yeah, so that's kind of that whole deal. Like if you are going to go down that hole of taking on these calculated risk and stuff, you just have to make sure your R&R, your risk to reward ratio, makes sense. But another route and something that a lot of people recommend is just passively purchasing assets for the long term. I mean, not touching options. Options are something you could use to generate income or to speculate. But for this scenario, we're not even going to look at options. Maybe down the road, whenever we're close to retirement and we want to create more yield from our portfolio, we can look at selling calls. But kind of until then, you could implement buy and hold. Boring investment strategy, right? Buying index funds, buying high quality stocks, and so forth. And the problem with that is people, it's not sexy, right? You're not buying these stocks that can just rip to the moon. But it's okay. It's okay to do that because one, you could go focus. I know I spend a lot of time staring at screens when I could be focusing, focus on other businesses, improving other skill sets, optimizing other parts of my life, that could be, at the end of the day, if you add up the amount of hours spent on a trade, on, analyzing a chart, on, whatever, it doesn't make a whole lot of sense, right? Versus just setting up automatic investments, not even ever opening up the chart, forgetting your password, checking back in a couple of years or whatnot. So just some thoughts there. I wanted to show another illustration here. Let me see if I could show. Yeah, so this is a little graphic I saw online. And it's a conversation between Jeff Bezos and Warren Buffett. It says, when Jeff Bezos met Warren Buffett, he said, "Warren, your investing strategy is so simple. Why doesn't everyone just copy you?" And Warren Buffett supposedly said, "Because nobody wants to get rich slow." And this just really stuck with me because, investing has never been easier in any time frame in the world, right? It used to cost $7 a trade just to buy a stock. Like I have family that have told me like 15, 20 years ago, that's what it was, like on Scottrade. At Scottrade, I don't think it exists anymore, but it used to cost $6 or $7 a trade. Now, for the most part, it's free to purchase stocks or ETFs, mutual funds. Options are still, still have to pay for those on most platforms, but purchasing stocks and ETFs no longer charge anything. But coming back to kind of like the mindset I was kind of talking about before, getting rich slow is okay, right? And it should be okay. And I want to normalize that. You don't have to get rich today, tomorrow, next week, this year. But by implementing solid saving, disciplined strategies, investing into the market, buying the whole market, total broad-based, low-cost index funds is a strategy that works and has proven to work if you give it enough time. And coming back to that time piece, like it's something that, something else you also have to consider as well. Don't put money into the stock market that you need really any time on the short term, because we don't know when the stock market is going to go up or down. You might, I know this last couple of years, you put money in, it just goes straight up. But sometimes it's not always like that. Sometimes you might put money in, it drops 10%. Then what are you going to do then? Did you overextend yourself? Did you put too much money into the market where you actually need that money for an emergency fund, for paying off debt, XYZ? So that's why my rule of thumb is always don't put money into the market that you need. And that's something I've kind of struggled with earlier on as well, overextending myself, putting too much money. Then I'm anxious with the money, just trying to get a quick trade off. But just something that I've been working on, kind of scaling back and kind of just understanding there. But yeah, guys, I think that's going to be it for my TED Talk today. Just kind of wanted to get on here, talk about having the proper mindset when investing. You have different routes, different trading strategies that you can implement. Getting rich slow is an option. And Warren Buffett believes it could be one of the best options for the majority of investors out there. And I definitely agree with him there. So let me know what you think down below, guys. Please like, subscribe, stay tuned for more content. We're trying to push out some more content like this. Just kind of talking about mindset and having the proper risk management when investing into the stock market.